everybody. Thanks for listening in to another new episode of InCorp's Pro Business Podcast Series. We are Elton and Eric, your usual hosts for the podcast. So InCorp Group is a Singapore headquartered group that specializes in providing corporate services as well as business advisory works in 7 countries within South Asia. For more details of what we do and where we operate, please visit www.incorp.asia for more information.
Thanks, Eric. Today, we are very happy to welcome our colleagues, both Sarjit as well as Benjamin, who are joining us in this recording. So Sarjit, everyone will know, he's our Senior Director for the Risk Assurance team, and he has many accolades, and I can't do him justice if I just do a short intro for him. So I will leave Sarjit to do his own introduction. And we have with us also Benjamin. Benjamin is our head of tax, and he comes with himself a lot of experience both in the commercial sector as well as in professional practice. So I'll leave both of them to introduce themselves. Sarjit, please.
Thanks, Elton. That's very kind of you. Now, InCorp provides the whole suite of services. I play a small part in it, which is look after the risk assurance practice. And the risk assurance practice has got 3 dimensions. One is internal audit. Number 2 is enterprise risk management services. And number 3, sustainability reporting. And I'm super excited about today's or this year's budget and today's session, simply because there are many parts of the budget that would relate to the area that we specialize in my team.
Sure. Thanks, Sarjit. How about Ben?
Hi, thanks, Elton. Hi, my name is Benjamin, and I lead the tax practice here at InCorp. We provide a full suite of tax services, including corporate tax, personal tax, even transfer pricing. So I'm here today to lend my thoughts to the tax changes that were announced in the budget.
Okay, thanks, Ben and Sarjit. As all of you are aware, Singapore just announced its budget very recently. All right, in the budget 2021, we will be discussing some of the key measures today in this recording that will directly benefit as well as impact Singapore companies. For foreign listeners who are tuning in today, there will be a showcase of how supportive and proactive the Singapore government is to combat the situation caused by the COVID-19 pandemic. So before we delve into the different topics that we have lined up today, I'd like to invite Sarjit to give a very high level helicopter view of the overall budget 2021 that's delivered by the Finance Minister and Deputy Prime Minister, as well as his own personal take on this year's budget.
Thank you, Elton. Really a privilege to share with our colleagues and our business associates this perspective. I mean, for me, the 2021 budget is not just about surpluses and deficits. It's not about dollars and cents. It's far beyond that. It's about the values and the outlines of our plans so that we can emerge stronger in the future. And by that, what I mean is, if you think about it, if you just take one step behind what was announced at the Singapore budget, underlying that budget was a strategic plan. And I'm really confident that a lot of thought has been put behind that plan. So let me just share with the audience here my sensing of the budget, the way I read it. I think Singapore is trying to find a balance between performance and conformance. And by that, what I mean is, whilst we need to practice safe management measures because it's super important to keep our healthcare system safe and our people safe, it is also equally important to prepare when the gates open. And that's what I mean by being ready to kickstart our economy when it is safe to do so. So it is about performance and conformance. And to me, frankly speaking, I think if we start reading the news, we always see that we have a clinical approach. We have never announced a lockdown of our borders. We have never announced that. So we don't have border lockdown because simply we want two things to continue to exist. One is we want trade to continue, and number two, we want the supply chains to continue. So if you want to allow for that, then we need to think about how Singapore responds to this pandemic in a very clinical way. If you think about it, there are three types of clusters that we need to look out for. So we call that a risk budget. So a risk budget is you have community cases, you have foreign worker dormitories, and you also have imported cases. And if you look at the numbers, the community cases are kept very, very low. The foreign worker dormitory cases are also kept very, very low. We do have a number of imported cases, and the way we have managed the imported cases is by looking at the incident reported rate by countries. And we then identify how much space do we have in our hospitals in order to be able to accommodate the COVID cases, because we want to make sure that our ICU is not fully stressed out because of that, right? Stretched out, because we have to look after other illnesses as well. So if we think about it, really the Singapore government, I think, has taken a very clinical approach to managing this risk by allowing borders to continue to some extent in a very calibrated manner, so that the imported cases we are able to manage by looking at the incident report rate, and then we also have an observed reported numbers. Observed rate, incident rate. Observed incident rate means when people start coming in and we find more cases than what is the reported incident rate, we have to adjust accordingly. So I just wanted to give that perspective to our audience, because often I've asked myself, why is it that we have so many imported cases? And I finally found some answers to it.
Thank you, Sarjit. I think it's a wonderful helicopter view of our take on the budget as released by our Deputy Prime Minister. I guess I'm very sure in today's call for local Singapore companies or for foreign companies alike who's looking to invest into Singapore, all the various topics we're going to talk about today will closely align to what you have shared with us, and on the perspective of why the government has released or announced the budget as it is. So maybe let's dwell or dive right into the discussion today. So Sarjit, on you again. I mean, one of the topics or one of the few announcements that is included in the Singapore budget will be on job support, or in terms of boost our unemployment or employment rate within Singapore. The government essentially will provide wage support for employers in Singapore to help retain local employees in this phase of economic recovery from the pandemic. And this includes this scheme called the Jobs Support Scheme, introduced in 2020 at the height of the pandemic, whereby the scheme support up to 30% of wages. And this particular scheme, the JSS, will be extended by a further few months to September 2021 for the hardest hit industries such as aviation, aerospace, and tourism. All the other industries will get a shorter extension with wage support of up to 10%. So I guess in terms of wage support, this is what every Singapore companies or employers in Singapore would deem it as good news, especially for the struggling small and medium businesses and local employees. Though we have been hearing from many of our clients and our local Singapore companies is that many companies out there actually expect a much longer wage support other than the extension of the 3 to 6 months periods. So what's your take on this, right? What's the potential reason of why the government didn't want to provide a longer period of wage support in this case? So Sarjit, over to you. I think it's a hard question to answer.
Okay, so I know it's a great question, Eric. I think it's a super question. I think when we ask people, right, how long will this situation last? You will find various responses, and there's no one single response which you can say is the most likely scenario. Why I say that is because when we ask people, will it take 1 more year to recover? Will it take 2 more years to recover? Will it take 3 more years to recover? 4 more years to recover? 5 more years to recover? 6 more years to recover? 7 more years to recover? 8 more years to recover? 9 more years to recover? 10 more years to recover? 11 more years to recover? 12 more years to recover? 13 more years to recover? 14 more years to recover? 15 more years to recover? 16 more years to recover? 17 more years to recover? 18 more years to recover? 19 more years to recover? 20 more years to recover? 21 more years to recover? 22 more years to recover? 23 more years to recover? 24 more years to recover? 25 more years to recover? 26 more years to recover? 27 more years to recover? 28 more years to recover? 29 more years to recover? 30 more years to recover? 31 more years to recover? 32 more years to recover? 33 more years to recover? 34 more years to recover? 35 more years to recover? 36 more years to recover? 37 or 2 more years, or 3 more years, or forever. We may not even recover. You'll find that the number of respondents are equally the same. So again, I find that we have to take a measured approach. And the good news here is that we are really dealing with the uncertainty that looms before us. And many people think that we'll go back to the old. I think not. I think we will be in a new state. And we'll have to find what this new state is all about after, we have. So there's a saying, no one is safe until everyone is safe. So until that point, so the point is, when is it safe to travel again, like the pre-COVID world, right? And I think the good news here, Eric, really is that this year the government has decided to extend the wage support, the job support scheme, and in a very calibrated, targeted manner to those sectors that have been most hard hit: aviation, aerospace, tourism, the hospitality industry. So the other industries will also get a shorter extension with a wage support of 10%. For those hardest hit, they will get 30% of wages extended to September 2021. And that's great news. Will it stop? No, I don't think so. I think we may have to continue. And this is going to be the situation. We will have to wait for budget 2022 to figure out what's next.
Based on last year's budget, Sarjit, the government released 4 budgets last year to combat the pandemic. So I think this might not be the end, but for now, I think it's a great support for, again, like what you said, the hardest hit industries. And especially, I think for all Singaporeans who are listening in today, right, they're worried about employment and they're worried about their jobs. So there's also another scheme called the Jobs Growth Incentive Scheme, that will be extended as well, whereby the government co-fund 25% to 50% wages of new local Singaporean hires, right, based on, of course, certain conditions. So in this case, do you think this will be a useful measure, right, to lower unemployment rate for the country and help our graduates secure jobs faster?
Eric, I'm a big fan of the schemes that we have developed over the last 1 year. I think they're truly innovative. For example, we in our firm have supported the SG United program, and I find real value in that. What we need to do is make sure that while we provide employment to young graduates who are coming through the system, and provide them training, we must try to also see whether we can equate their compensation at the end of their training period. So that's what we are going to do at InCorp. We plan to for example, I know 3 of my SG United. I'm giving a personal story here. I have 3 that are directly with me, and all 3 will be continuing after the training, a full-time employment with us, and we want to give them a sign-on bonus to incentivize them. So that's something I'm super proud of, because that's the right thing to do, so that our staff are motivated and they feel that they are valued by the organization. I'm just sharing one example of what companies can do to motivate their employees. The government, I think, has done its part, provide the training platform, and is going to continue providing that. So we should, as small businesses, take join the program and support young graduates coming through the system.
Thank you, Sarjit. Maybe Elton, you want to ask the next question?
Yes, thanks Sarjit and Eric for the very insightful discussion. Okay, now let us move on to another topic where maybe our quiz band on the latest GST measures that the government has introduced. So I'm sure all of you would have heard from the latest budget announcement that there's a new measure whereby GST is to be imposed on all low-value goods from 2023. This will apply to all goods imported via air or post that are valued up to and including the current GST import threshold of $400. These goods currently are not subject to GST to facilitate clearance at the border. So GST will also be imported on B2C, business to consumer imported non-digital services, which refer to services supplied over the internet or through the other electronic networks that require human intervention. So I think what we have seen previously is that Singapore has already introduced the overseas vendor registration regime,
The
where
Netflix
overseas
tax.
vendors.
This is called a Netflix. This is called a Netflix tax.
Yes, correct. So all of us will be subject to this kind of tax, and basically overseas vendors previously they don't charge us any GST, and now whoever that has a global turnover of $1 million and they supply consumers with digital services exceeding 100,000, they will need to compulsory register for GST. So Ben, the question to you will be, many local businesses and individuals might be caught by this registration, GST registration, especially for overseas vendors who might not have a presence in Singapore, but have always been traditionally selling their goods and services to Singaporeans or even the Singaporean consumers over here. So how does this regime actually affect local business players who are overseas vendors who are seeking to do business here in Singapore?
Thank you, Alton. As the digital economy grows exponentially, especially and this situation has been exacerbated by this COVID-19 situation where more and more people are shopping online as opposed to going out to the shops to actually visit the shops and make their purchases. So the entire thinking behind this, introducing this new GST measures, is to level the playing field between both local and overseas suppliers. But whether these measures will turn out to be a real benefit for local suppliers remains to be seen, because I mean, as we all have shopped online, I don't think our shopping patterns are affected by these GST measures, especially when these new measures are on low value items. And so it really remains to be seen whether consumers will be deterred by these new measures. And also I think details on how these new measures will be implemented remain to be seen. The details have not been announced by the government, by the government. Yep. And but so that's how it impacts consumers. From the government's perspective, of course, as the digital economy grows, it's a great source of revenue for the government. But I don't think that these measures are going to go a long way to plug the gaps in terms of the deficit brought about by the government spending to support the economy. But I think every little drop helps.
Yes. Thanks, Ben. And I think that goes in line with the government's stance that, they have always been trying to move away from the reliance so much on our corporate tax revenue to move towards, indirect tax revenue such as GST. So what do you think of this impact that, besides, of course, when you were saying that, even when we are making online purchases, we always compare the prices charged by local suppliers and overseas suppliers. And even with this GST trying to level the playing field, like what you mentioned earlier, sometimes we see that online we can buy things that are 30% cheaper or even 40% cheaper than what our local suppliers are giving our consumers. So will this GST, on the goods actually help to really level the playing field, or what should our local businesses actually look out for in this in this stance?
I think local businesses should think about how they improve their online presence to compete with overseas suppliers. And while price is certainly one of the key considerations for consumers, I think the way that local suppliers position themselves in terms of their digital presence will also go a long way in terms of helping them to compete with the overseas suppliers. And the government has already done its part to try to level the playing field. So I guess the next step is for them to help themselves in terms of how they position themselves in the online space.
I think on this topic, I foresee, I mean, between the four of us, I foresee potential issues for overseas vendors or overseas companies looking to export their services or goods into Singapore. If there's this need of registering GST or filing GST returns with our government here, it might drive them away. In fact, they prefer not to sell into a small market like Singapore, which in a sense, inevitably, I think is what Singapore government is trying to do, is to drive up the competitiveness of the Singapore companies. But Benjamin, as a tax expert here, you know, if you're on Netflix today, or if you're a potential Netflix company to be, do you think this will be a potential issue for you want to sell into our domestic local market here?
Well, I guess it's really a cost-benefit analysis at the end of the day, because depending on the market size in Singapore and the benefits to be reaped by having a presence in Singapore, then versus having to register for GST, and not to mention that for overseas vendors, the process is much more simplified than local vendors who have to register for GST. So there's a simplified process for them. So at the end of the day, it's pretty much a cost-benefit analysis for them in terms of numbers, like the revenue that they will derive from the Singapore market versus the additional compliance costs.
Yeah, I think this measure might also, I won't use the word compel, but I think you give a lot of foreign companies to want to localize or set up an entity here in Singapore to provide the direct services. So it might indirectly create more FDIs into Singapore. But okay, thanks, Ben. So Sarjit, back to you again. Right? I think if you can move on to the next topic on grants, right? So in the budget, the government has also announced a few enhancements or new policies or in terms of grants, right, to help Singapore cope with their cash flow. There are several new schemes or enhancement schemes of existing grants already available in Singapore to help Singapore companies internationalize or adopt digitization for their businesses. So in your personal opinion, what are some of the standout schemes?
Thanks, Eric. That's a great question. You know, if there was any standout, Eric, the standout was the number of abbreviations that we have created in this budget.
Yes, for our foreign listeners today, yes, there will be a lot of abbreviations.
Yeah, if we thought CTE, PIE, and ECP were bad enough, we've got a library of abbreviations here in this budget. So anyway, I wanted to share with our audience that there's something for everyone, and the way the budget has been prepared, based on my assessment, is that it's very targeted to 4 groups of companies: the MNCs, the medium enterprises, the small enterprises, and also micro enterprises. So I see that as an approach so that we could capture opportunities for everyone and build resilience in every type of entity type. If there were 5 grants that stood out for me, they are, and I'll start with number 1, the Enterprise Development Grant. The abbreviation is EDG, if anyone is interested in that. This is what it means. What it means is that businesses can actually tap on support for projects in 3 key areas: core capabilities, innovation and productivity, and lastly, internationalization. So that's the purpose of it. And the enhanced support is to cover up to 80% of the qualifying course, and this has been extended to 31st March 2022 until next year. The next one is interesting. The second item I would like to share with our audience is MRA. And I was struggling to find out what MRA was all about, actually. So
market readiness awareness.
Assistance, actually.
Correct. Assistance, yes.
Market readiness assistance. Yeah, that's what it was. And what it does here, if the name actually tells you what it is, right? Market readiness assistance is to help businesses tap on in-depth FTA consultancy and support for overseas business development. So under MRA, businesses may also apply for premium subsidy when taking up trade credit insurance to protect themselves against buyer default. Super important, especially in the current environment, because the risk persists, and you need to make sure that we have support for that. The enhanced support is to cover up to 80% of the qualifying costs, and this has been extended to 31st March 2022. The third category is Productivity Solutions Grant, which is PSG, and the businesses can access a wide range of pre-scope solutions, including IT solutions, equipment, and consultancy services. So again, super important, job redesign. If you think about it, what has really changed in the last 1 year is transformation of our businesses. Everyone is looking at how to redesign their business and how to think about what are the kind of services we need to offer when this risk subsides. So businesses will be able to achieve productivity gains and offer enriching jobs with better wages for workers, in this case, through this scheme. The fourth one is also super interesting. First time ever, Chief Technology Officer as a service. Now, if you think about it, I shared with at a number of at our clients my 3 risk clusters. My second cluster of risk is actually people, right? And in that area, there's a need for talent. And there's, it's not about availability of workforce, but also about ensuring that we have some right skills in our organization to take us forward. And IT skills are one of those that we need now. So this CTOAAS, that's what it's abbreviation.
That's a long abbreviation.
This was basically what you can just remember it as CTO, because it's like Chief Technology Officer as a service, right? And it supports SMEs to uncover their digitalization needs and transform their business operations through professional IT consultancies, offering end-to-end digital advice from digital consultancy tailored to their business needs. So I think that's really essential, especially in this period. And lastly, the last one is Enterprise Sustainability Program. This supports local enterprises to develop capabilities in sustainability and seize opportunities in sustainability. And we have a Singapore Green Plan. This is also new. These are all the things that are exciting, and one needs to read the Singapore budget to understand why we are providing the incentive in order to move forward, right? Singapore actually has got one of the lowest carbon emissions. I remember Finance Minister saying it's less than 1%, 0.11%. But what we are saying is that we are sending a message to everyone that we take this seriously. Why? Because Singapore is a small country, and for us, sustainability is super important. We are only as safe if the world is safe.
Thank you, Sarjit. I guess on the sustainability portion, it also bolts into the other initiative that the government is launching, that we want to be hopefully 100% electric vehicles or adopting 100% electric vehicles by 2030. So that's about a 9-year plan. So I guess for foreign companies out there who are in the supply or value chain of electric vehicles, right, which is all the range now thanks to Tesla, and it's overvaluation, I would say. But in terms of EV, I guess for the Singapore government, this is a natural step to want to push this and hopefully reduce carbon emissions by 2030, yeah, which is, I think, other than all the different grant support or monetary support, doing our part for the environment globally, I think this is important initiatives.
Absolutely. Thank you.
Okay,
Thank you,
thanks,
sir.
Eric and Sarjit. So I think let's move on to the next segment, or probably our last segment. Another question for Ben. Ben, I'm sure you are aware, and our listeners here will be very interested in the double tax deduction for internationalization scheme that's available for Singapore companies. And this scheme is very generous because it allows Singapore businesses a 200% deduction on qualifying market expenditure, all right, for them to expand overseas. So in the current budget, all right, the scheme has been enhanced by the government to drive internationalization of Singapore companies upwards, all right, for them to branch out into the other countries in the region and beyond. So what are your thoughts on this scheme? And do you think that this scheme would really benefit Singapore companies and how they can tap onto this to actually expand their footprint beyond the Singapore shores?
Thanks, Alton. Yes, as you rightly pointed out, this scheme is to actually help companies to enjoy enhanced deduction on expenses that they incur when they go out for or move outside of Singapore and to explore whether new overseas markets are feasible markets that they are feasible, new feasible markets that they can expand into. So whilst the scope of expenses that have that are included in this scheme have previously already been pretty generous, what we have seen in this budget is the government has actually expanded the qualifying expenses to cater to the current situation, whereby if there are virtual trade fairs that local businesses take part in, these expenses that they incur in participating in these virtual trade fairs also qualify. And the government has also enhanced the qualifying activities under this scheme to include a broader range of activities. So, I think that yes, the expenses that they incur in terms of going outside of Singapore, depending on kind of activities they do, I think every little help that the government provides is will be useful, and helping them to reduce their tax if they are in a tax paying position would also improve their cash flow. So yes, I think the government has moved in the right step in terms of enhancing this scheme for local businesses.
Yeah, thanks, Ben. I think in our business of helping companies to internationalize or invest into Singapore, I think to what Sarjit has shared earlier on the enterprise development grant and the market readiness assistance grants, of which the main one of the core activities or core focus of the grants is to help Singapore companies expand out from Singapore. So for companies that do not qualify for the grants for whatsoever reason, they can also fall back on the DTDI or the double tax deduction scheme to help them in internationalization. So I think this is a very clear step for the government to want to push or help companies grow and expand beyond our shores. So I think thanks to Sarjit and Benjamin again for joining us today, and of course to our listeners. I thought to round off our discussion here today, I'll probably pass the mic to our smiling Sarjit here today to essentially close off our session today, and of course give his valuable take on the Singapore budget.
Thanks, Eric. If there was a key takeaway, I would put it in one hand. right? 5 fingers.
I think that's it.
Yeah. So the very first point I would like to make is that if I want to summarize the whole budget, I think the very first point is what is this $11 billion COVID resilience package all about? The purpose of it is because we want to keep our people safe and help those who are most badly affected. That's point number one. The second point I would like to make is that the Emerging Stronger package is to help workers upskill and businesses innovate. Important points, because if we understand the values that underpin our budget, then we can go and look for those schemes that are going to be of help to both businesses and to the workers. So it's really about upskill workers, and secondly, to make sure that businesses innovate so that we can all grow and prosper together. The third point is that the $900 million household support package, the purpose of that is for social needs, right? It's really focused on social support. So there's something for everyone. So we are mindful that the society also needs help. And this $900 million household support package is to help us ensure that we have a strong and inclusive society where no one is left behind. Number 4, and this is something new, the Singapore Green Plan. I remember watching commercials on TV, or I wouldn't call it commercial, but messages on TV. And this is the first time I saw ministers coming forward to share with us things that are changing in our neighborhood. And it's kind of super important to recognize that the Singapore Green Plan shows our seriousness as a country and reflects our commitment to sustainability. And notwithstanding that we actually have a small percentage of carbon emission compared to the rest of the world, but it's sending the message that we have taken that into account in our budget as well. And lastly, I think financial prudence. Financial prudence in the sense that we can pay for the things we intend to do, but we should never spend beyond our means. And that financial prudence, I think, is underlying everything we do. It's about rebalancing the budget. I see that coming through because there will be savings as well. And when the savings are going to emerge, those savings will be used to support those who have been badly affected. To really try to find a balancing approach, those who need support and those who are actually doing really well in this period as well. Not everyone is badly affected. Some are doing much better than before. So really it's about trying to find that balance. And I think that finding the balance is super hard, but we can only do that as a country together.
Thank you, Sarjit. Thanks everyone and all listeners in today. So if you need more information, right, of the new government measures based on our budget 2021, or is interested to expand into Singapore because you've heard about all the good things that our Singapore government is trying to do for this year and beyond, do drop us a note on our website, again at www.incorp.asia. Thanks again, and we'll be back with more exciting series in the months to come. Thanks again.